Welcome back to Market Day Report. Well, welcome to a Tuesday. We're trading markets here this morning. And how about we check out what's happening with the corn market? In Chicago right now, we're higher across the board. December up 4 1/4, 4.13 3/4. This could be on the heels of another flash sale to Mexico. When you look at where we are to Mexico so far this year, compared to years prior, and we're ahead of USDA projections. Soybeans are higher, 9.90 1/2 on the November. Higher across the board as the front month is up 9 1/2 cents. What about the wheat market? We've been higher all day. December, Chicago, 5.75 3/4. That's 3 1/2 higher, with July at 6.13 1/4, trading in higher territory. Front month for hard red up 3 1/2, with July, the new crop, at 6.17 3/4, up 3 1/2. And we're seeing some of the same in Minneapolis, but penny gains on the front 3 months, including December at 6.15. Will we see gains in New York? You bet. December, Chicago, or December, let's get this right, take 2. December cotton in New York up 1 point, 72.21. Let's welcome Chris Swift with Swift Trading. And Chris, now that I've gotten through the cotton market, spit that one out. What are you watching?
You know, it's kind of interesting, Tony. We looked at this summer where we had really high price. I say really high price. We had $5 and $6 corn out there. We had $11, $12 beans, and now we're trading under 10 beans and well under 5 corn. There's only about 24 cents difference spread between December corn and July corn. If we think about our cattle producers, this is cheap corn. In all reality, yes, it could get less expensive, but when you look at that carry charge out there being so low, it's the cheaper corn to own out there. So although it doesn't say that the price is going to go higher or lower, but if you thought that there was going to be some kind of price increase out there, not excluding basis, that's the corn contract owned would be the July, simply because of the low carry that it's got to it. And then when you look at that carry, we see now some farmers, I think, are trying to make up the difference from maybe some poor marketing this summer and asking really high basis. A lot of producers, cattle producers, need to reload this time of the year. Corn coming off the combine tends to be the cheapest. It is $4.11 a bushel right now, but we hear basis of $80, $90, and $1.15 over if you want my corn. So that's where we're kind of getting into right now is we probably need to reload at a lot of feed yards or backgrounders, and yet we're not seeing the same price as what we're looking at the board. So a couple of different aspects to look at. Corn's very inexpensive right now in comparison to where it has been. We probably need to start looking at owning something out into the future, and especially since that's where the cheapest corn is right now.
Right, and just, again, helping those feeders move back into profitability. Mm-hmm. Those feeders have really had a tough time over the last few years. Speaking of feeders, how about we take a break? We'll come back in a moment with Chris, and we'll talk livestock markets deeper. Yeah, we're going deep dive here. Market Day Report continues in a moment. This is Market Day Report. Let's look at livestock futures as we get things rolling this morning in front of a cattle on feed report set to roll out on Friday afternoon. All right, live cattle futures in Chicago up 80 on the front month at 187.80. Really, again, trying to work to the convergence, if you will, of the October contract with cash. And speaking of cash, smaller show list this week, and we're pricing at 190. December live cattle, 187.50. That's 67 higher. We mentioned the feeders before going to break. We'll bring back in Chris Swift in just a moment. November feeders at 247.37, up 77. Hog trade, again, has been higher today. And the question for Sam Hudson earlier today was, will we see $80 hogs by the end of the week? 78.72. We're up 45, but well off of the day's high. Let's bring back in Chris Swift, Swift Trading. All right, let's talk livestock markets. We went to the break talking about feeders and profitability. What are your thoughts?
You know, it's interesting because we've lost all the margin. Everybody's just trading right on the cuff. And when we look at the interesting of the pricing of the feeder cattle board, we saw both the front months, October and November, higher, the back months a little bit softer, and that's because of a time issue. It's a cash settled contract. October expires into next week, so there's very little time, and that leaves for very little room of speculation. I don't want to get too far away from the index because I know that at expiration it's going to be at the same price. With November, only a couple of more weeks. It's a very short-dated contract. November the 16th, I think, is when it expires. So then you go all the way to January. Well, I have a lot of time for various fundamentals to change or improve or deteriorate between then. So therefore, I can move that futures contract further away, closer to, in the opposite direction, simply due to time in trying to find out where that cash market may be in the next 2 or 3 months.
You know, one other thing dealing with the cattle market that I've been reading as of late is the discount that unweaned cattle are getting as they're coming through. And the question of whether some of these producers with smaller herds will start, as things start tightening up on them and the prices start tightening up, will they start looking to wean those cattle before selling them? Yeah, those calves.
And of course, death loss is a real big issue this time of the year, and so a lot of them just want to be gone with them and rid of them and not have to worry about that. I'm kind of a little bit more interested in the drought. If the drought continues into probably the end of November, there may be some decisions to dump cows. We don't want to have to carry them through the winter. We may or may not have hay supplies adequate to do it, but then we get into the spring of the year, and I'm sure not going to hold back retaining heifers if I don't have any pasture. So that's going to be a really interesting facet going forward, is watching that drought to see how it might impact and move cattle around the country.
Yeah, I think we're reliving some of the questions that we had, what, 12 years ago?
Sure, absolutely. Yeah, 2013 and 2012. 2012 was when the big drought was. We had already seen some massive liquidation by then, but then that's when the expansion really started and we began to pull heifers out of the slaughter mix. And
you'll also recall that's when we really started changing the way packers were approaching this as well, when they closed that plant in Plainview, Texas.
Oh, sure, and they really consolidated. They became very lean, very efficient. And if you really look out into the cattle industry, inefficiency has plagued the industry for years. What we're seeing now is a significantly more efficient production of beef, however you want to say that, but we see strings of vertical integration that have now completely made some end meat sellers very efficient in their procurement of beef and able to market it. And then we see the dairy beef operations come in and try to take up some slack there, which again makes for a big issue for the dairy. We see milk prices now made new contract highs this week, so it's going to be interesting to see how we come about with that.
There you go. Okay, more reason for you to come back and see us next week.
Absolutely, we'll do it.
All right, Chris Swift is with Swift Trading.
Great stuff, always great. And of course, weather, always a driver.
Every
the trickle down
time
of this drought and how it's going to affect everybody across the board.
Absolutely.
Just devastating. Thank you guys. Thank you both.